Hello, dear traders. Welcome. It's Saturday. Markets are closed, so I'm doing my weekend MK block summary as I've been doing for a while now. So let's start with dollar yen. So here we see that was on the 1st of May, cleared the 200 moving average day chart as predicted. So here in the morning at 8:56, you see, as it was obvious, shorties came into the market. Euro dollar broke to the upside and went to clear the 200-day moving average and the high. Remember the meter level. So I wrote, as predicted last week, the smart money Argos did what they intended to do in dollar yen and cleared the day chart 200-day moving average driven by the selling activity. Yeah. Then on the second, okay, so that's where things get interesting. So we got the two option strike target signals, so we know the market wants to fill them. But we had a bit of a squeeze in the way around 12.24. So I wrote dollar yen, in order to trade these option strike signals somewhat, more longies need to come in and the squeeze line needs to have some slope downwards. Yeah, this one. Because it shows you that shorties are leaving the market. Remember. This can happen during the day, and that's exactly what happened, okay? More longies came in, more shorties left the market. We had a little collapse in the squeeze line, and therefore those option signals were tradable. Okay, nice trade for the ones who caught it. I caught this one. So both signals got filled nicely. And you see, downward sloping squeeze line shows what will happen in that scenario. So good trade. On the third, the next day, reverse gray pattern 50%. So you see, like, if this is the whole pattern around the middle, we already reached the middle. So those signals got filled. And you see, the shorties kept on leaving the market, okay? The squeeze line went down further and further and further, while the green squeeze line went up further and further and further, okay? Showing that longies are coming in. That's why the smart money algos push the market down, okay? The longies come in, so they push the market down against those longies, these ones. All right, on the 4th, I said order gap zone filled, okay, on the 1 hour chart. So we see we're at the medium term stop and the order gap zone. So complete reversed gray pattern because more longies came in, you see? Line went above the red line, more longies came in and it went down against them. So that's how a nice trade can turn into a beautiful run. Now what happened then is, at some point we got an option strike signal long, as you can see. Yeah. Now I wrote dollar yen as an option strike target on the 30-minute chart, but overall long is in the way. But next week we have a good chance that this one gets filled. Okay. So on the 5th of we see already the up move as predicted. Okay, towards the this target. And of course they can fill the order gap zone and so on if longies come in, but during the week, if some shorties come in, boom, it can take that strike target next week, for example. Yeah. Nice. Okay, pound yen. So the same story last week. Okay, shorties came in, it broke to the upside in a squeeze mode and went for the long-term highs. Yeah, like here. Pound yen kissed the long-term high on the basis of the squeeze power against the down money shorties. And then on the 5th, so we see it took the upper targets, then did the pullback down, normalization. You see after some shorties got kicked out. Again, pay attention to this here. Some longies came in, so a bit of a down money switch, down move. But then we had a medium term stop above the price and order gap zone, boom. And it did a nice move against them as soon as some shorties came in again. Yeah, boom. Look at this clockwork. How cool is this? Okay. So that's that. Euro Aussie, very interesting. So on the 2nd, you remember from the week before, we had those 1, 2, 3, 4, 5 open option target signals, and look, they all got filled. How amazing. These signals, they come real time, they do never repaint, they do not come in a lagged fashion, okay? Remember that. Look how nicely they got taken. Of course, also medium term stop in the way. And again, look, because the squeeze died, okay? The shorties left the market and got kicked out and left the market more and more while longies came in. So, of course, they're going to take those targets. Yeah, no rocket science. Now, at some point then, they did a pullback up. And look, we see the order gap zone existing. So they did a pullback up to fill the order gap zone and also the upper stop. So we'll see. So that was the 3rd of May. And then on the 4th of May, boom, they also took the upper medium-term stop. Look at that. And guess what? Once they took the target, the medium-term stop, boom, down again, like clockwork. Look at that. Option signals because shorties got kicked out and left the market. Order gap zone filled. MTS filled. Look, by the pip, almost completely collapsed to the lower target. Why? Because shorties left more and more and more, while longies came in at some point. Okay? How amazing is this, ladies and gentlemen? If that doesn't rock your boat in trading, nothing will, I can tell you that. So if you caught some good trades, well done. Euro pound on the 4th. So did a really exaggerated down move against the longies here. Okay, they cleared the 4-hour low. And then on the 5th, we see also, look, why do they do these moves? Because they wanted to clear the day chart moving average, the 200-day moving average. They can't do that every week. You see, so if longies keep on buying, look at this clear target on the long-term chart. That's why we look at the day chart. Look, 1, 2, 3, 4, 5. 5 lows and the moving average. Of course, longies coming in trying to buy and place a stop below the moving average. Of course, the smart money algo is going to push the market down and clear that target. Yeah, see it many times. Pay attention how these things come into play in different pairs in 1 week, and they can clear certain areas on the longer time frames. Yes. Kiwi dollar, short scalp. So here, look, the high got taken, and then I said Kiwi dollar should fill that option strike target, so short trade. And yeah, came nicely. All right, so did a nice move, then did a pullback again, because some shorties came in and cleared the upper moving average on the day chart. You see? Again, like some kind of gray pattern here on the day chart. And okay, it didn't take exactly the target. You see, like it's turned slightly above the overall target, but that's why we place our target, our TP a few pips above this target as always. You need to incorporate the spread. But yeah, good. Then we made a mini dumb money switch again, but yeah. The upper target got taken. Dollar cut, really interesting. So remember the last week. So this week we got the 4-hour reversal. This is your retest of the high. Longies came in, collapse, boom, full 4-hour reversal down. Remember that scenario. And here on the 4th, you'll see 4-hour reversal plus inner range medium term stop as target. Good combination. Okay. So it took all that out, and not only that, it took all the order gap zone. It took everything because, again, on the higher time frame, we had the nice target there as a low. Nice one. If you caught some pips short, dollar cut, well done. Euro dollar target zone run. So on the 2nd of May, I said euro dollar going for the target zone as expected. So we're at 1, 2, 3, 4 lows. Long is coming in. Okay, the highs have been cleared. So still in this consolidation we have for a while now, but the upper side got cleared, so they went for the lower side against the longies. Took everything there, then pull back, filling order gap zones. You often see that with a pullback they fill some order gap zones. Okay, a 30-minute chart in the evening. We then had a medium-term stop target, some shorties. So of course they're gonna take that target. Boom. Yeah. And then I did a video thing on the 3rd before the interest rate decision, FOMC. And you see, like, you know, some house cleaning, upper zone, then lower zone, or the other way around. Exactly what happened, yeah? They cleared both sides. So on the 4th, you see, they went for the MTS. That's interesting, okay? And then, as you can see on the 30-minute chart, filled again an option target, okay? And the medium-term stop, after they had filled the upper side, even on the 4-hour chart, okay? And then on the 5th, you could see neutral, slightly bearish, with a lot of longies above the price, but it's in the middle of the 4-hour range. Both sides have been cleared, so it's post-house clean mode, not a squeeze, so a bit neutral now, which affects all the other markets because it's $0. Yeah. Gold on the 1st, look at that, boom, big move to clear the upper order gap zone. And then, really interesting, boom, up move on the 1-hour chart to take the medium-term stop. on the 2nd of May. And guess what? After it went up against the shorties in the squeeze mode, we get a option signal short. Some shorties in the way though, but guess what? They took it, yeah? Boom, filled the option target, okay? Because with long is overall coming in and short is overall leaving. Again, pay attention to this, okay? How cool is that? So look, they've took everything. The lower target, the upper target, the option target, okay? You see, like, everything gets taken eventually. They play Pac-Man, as I say. Okay, Australian dollar, a bit less action like last week, with really cool setups last week in Aussie. But so you see on the 2nd, it went up as expected, okay? Up against the shorties, longies left the market. It did some grail pattern on the 4-hour chart, cleared this target, boom. But now, of course, is for our reversal zone, took the medium-term stop target, okay? Then went down to fill the order gap zone here as about 6:14 in the evening. Some kind of for reversal thing going on, and you know, stayed a while in this order gap zone. They're consolidating. You see, upper side, lower side, upper side, falling back. At some point then, shorties dominated this consolidation, and they used that to take the upper moving averages, okay, like in the other pairs. You see it nicely in the day chart. So a bit more complex this week in Aussie. Cable, so in the 2nd for our reversal, so it took the high, okay, down money switch from shorties to longies, and for our reversal down, you see some nice targets performing in for our reversal, nice target zone with those lows here. You see they cleared those lower targets, and then once they kissed the lower for our reversal zone and shorties came in, they went for our reversal up towards the high again, going back and forth, okay? Like I wrote on the force at 6:48. Cable is still in a squeeze mode against the down money shorties. If a down money switch appears, a for reversal would be the result. So here you see an expanding squeeze because shorties come in. Of course, it goes up. The algos push the market up against the down money shorties, clearing even the higher time frame high. Okay, and remember, never trade it against a squeeze because boom, okay, topped out and took the targets. And here, as I wrote, because with the news in the way as well on the 5th, cable with the 2:30 news today, if no shorties leave the market, it could reach for the day chart high. However, if the money shorties leave, so squeeze in the collapse line, then it will at least do a normalization move back towards the range, so down. So if the US news are bad for the dollar and shorties keep on selling cable, then it can retest the high. But if shorties close their positions and the US news are stronger than expected, a pullback will be the result. Currently low tradability. So with the news in the way and those shorties and an expanding squeeze, we are not placing trades, okay? We're not insisting, for example, on a for reversal down when we have news coming up in a few hours plus an expanding squeeze. Remember, this is where you have to be careful what you're doing. And guess what? Like you see here on 11:18, with this big high on the day chart as a target, you see? It can even be taken with a gap. By the way, remember, the smart money algos will only do gaps against the respective side of the net money, yeah? If shorties are in a squeeze mode, they will gap up. If longies are the target of a squeeze, they will gap down. They never gap in the direction of big money accumulations. But we haven't seen gaps in a long while, and the reason for that is that they don't need to. Why should they, do a dramatic gap when everything works so well for them every single day? I should actually make a separate video about this. Bitcoin, that was interesting on the 2nd of May. So did some kind of 4-hour reversal. You see, kissed the high, down move against those longies. But now on the day chart is some kind of triangle pattern. So eventually we'll break out. But too many longies in the way. That's why it doesn't break out to the upside. But remember that in Bitcoin, is similar to the metals. We have more impact of fundamental factors. It's not the same like in Forex. You know that. Nice one, Pound Aussie, yeah? That was really cool on the 1st. So we see with 1 to 3 open option targets. But at this point here, we had, the slope line starts to come down, but needs to come down more. Too many shorties in the way, so we're not just trading down. But eventually what happens, you guessed it, okay? Collapse, shorties leave the market, longies coming in. So they 1, 2, 3 fill all the option strike targets on the 2nd. Oh, nice. Very tradable then. Sometimes you have to be quick when you see that things are happening and shorties are leaving. Oh, it's a nice example here. Pound Aussie, okay. That after they filled those option targets, they have also order gap zone and MTS above the price, so they do an up move to fill that. Look, and this up move on the 1 hour chart to take the order gap zone plus the medium term stop was with 4 hour reversal energy up. So this combination is always powerful, remember. Tradable. If you caught the long pound Aussie, well done. Okay, Euro Yen on the 1st of May. So squeeze energy, remember last week we had more and more shorties coming in. Squeeze on the day chart, which dominates everything. So they do not only take the long-term high, but went up further, breaking out to the upside. I caught that. I did a really nice long Euro-Yen trade there. I entered expensively into this market. And however, what happened then this week is at some point, guess what? On the 2nd, we get 1, 2, 3, 4, 5 open option signals with very close targets. So they only need to do a normal pullback to fill them. That's exactly what they did. But these trades are for advanced traders because look, the squeeze collapse came a little bit late, and these are targets which are not far away from the price. But yeah, it is tradable. And then guess what? So not only did they take all the option strike targets, but with a dumb money switch again, short is leaving, so full reversed gray pattern towards the lower medium term stop. Boom. You see how repetitive things are. You look at the markets we looked at before. Very similar here, huh? Very similar market structure. I mean, for that matter, look at the previous MK block videos. The scenarios are repetitive. Or you know, like down money switch for all reversal, squeeze collapse, reversal in the other direction, etc. Inner range, medium term stop, gap zones. Order gap zones filled with a pullback, then, for example, option strike target filled. You see, like, very repetitive. So here on the 5th, you see, like, we had a down money switch finally in Euro Yen, and that's where the market came off overall. Okay, short is left, long is came in, squeeze over. So after this exaggerated move, boom, they do a nice reversal move down. And that, of course, is tradable. Then you can enter cheaply into the market, yeah, because after such a big move against all the shorties and a clear switch in the market structure, of course, the market will react. So yeah, some beautiful scenarios here this week. Again, you can see it's like clockwork, literally. And all you need to do is to wait for situations where you can easily predict the next market move based on the bias in the market structure. That's really all you got to do. If you see news coming up or FOMC and you know the market is sideways and so on, don't gamble around, okay? There's no bias. Do not, just take an aside. Don't. Be very selective. You don't need to, okay? Let them do the thing. Let them do a house clean and whatnot. And wait until you see clear setups developing, which then you can trade with confidence, okay? Like here, look at that. Filled the option strike target, and then exactly after that, boom, pullback. This is not random. Order gap zone, boom, okay? So understand that this is really what they do day in, day out, okay? I mean, look at that. Boom, filled and falling back, okay? So with all the examples, which are already documented at this stage, yeah? I mean, do you really want to say this is random? I mean, come on. It's anything but random, all right? Anything but random. Look at that. Boom, filled. And of course, some days or markets can be a little bit trickier than others. Yeah, that's true. Sometimes the market, will wait. Like here in Aussie dollar, that was interesting. It stayed in this order gap zone. And had targets on both sides. So then it just was waiting. Okay, shorties came in. All right, we take the upper one then. All right. And these can be easy trades. Like here in cable, you see, like we have nice targets within the range. Long is coming in. Of course, even if you enter expensively, you can, take this move here, okay? But then when you reach the 4-hour reversal zone and then you see shorties are coming in again, of course, take profit, get out. Because guess what? Otherwise, you may eat a 4-hour reversal. You don't want to do that. Yes. And that's important. So pay attention to the higher time frames. Okay, this week they were more relevant than in other weeks, but these things are taken into account by the smart money algos. Okay, if there is a clear target which cannot be reached for weeks and months, but then there's a chance, like, be aware of it. Otherwise, you may be on the receiving end, and you really don't want that. Okay. Look at this one. Boom. This is so powerful. Pay attention to all the things we know, and you will do fine. Okay. Like clockwork. Okay, I think that's enough for today. Thank you for your time. If you did well this week, well done. There were some opportunities. If you had losing trades, okay, then try to understand why that is the case. Also use the forums or send an email if you have questions, okay? If you want me to address certain situations or elaborate on certain situations, you're free to maybe also comment on the YouTube video and so on. And I will try to maybe go more into detail. But as you can clearly see, the causality is what's going on. That's a market structure that determines where the price goes next. That allows you to predict the next move with the high strike rate if you know what you're doing and you're simply waiting for the planets to align, so to speak, and then to find a good entry. If you do that and you have all your psychology and emotions in check, you can trade very well. And that seems to be the only sustainable way to manually trade in the long run, okay, if you ask me. I mean, I don't see how you have a chance to consistently trade well without having that knowledge, those tools. I mean, you will fall victim to the apparent randomness, which is not randomness, which is simply the smart money algos going after the dumb money positions, taking out stops, and respecting the principles I have verbalized, and which allow the smart money algos to make the dumb money lose as a collective, as a group. Okay, I hope you liked this one. I wish you all the best. Have a fantastic weekend and have a great next week. Stay safe. Bye.